Hey everyone, welcome to Campbell's Coins. Last week I premiered part 1 of my interview with Lior Gantz. This is part 2. Enjoy. Out of these 3 metals, gold, silver, and platinum, which of these do you see performing best this year? I know that we are just discussing the opaqueness of the economy and the difficulty of gauging certain portfolios, but do you see one of these performing better than the others?
I do believe that silver has the best chance, and I'll explain why, or the best relative performance for 2023. The dollar has gone down um, 7 out of 8 weeks straight. If you look historically at other times when that type of underperformance happened, it projects forward that the trend will continue. So I think that the dollar will stay very weak throughout the year. I don't know if you've seen this, but the Nikkei, the Japanese stock market, is at an all-time high after a 33-year bear market and resumption of a trend higher. But essentially, the 1990 high of the Nikkei after a 33-year bust and come back um, has reached an all-time high. It's unbelievable, and it shows you. And by the way, the DAX in Germany is also at an all-time high. So what it tells you is that money is flowing to markets that are outside of the United States after a decade where big tech has or the FANGs have sucked so much capital out of the ex-United States markets and into the United States. Now it's the other way around. Big tech like Google, like Microsoft, like Amazon, like Meta, are companies that are now essentially trying to figure out their new path. And in the meantime, investors aren't falling in love with them, with Apple being the exclusion. And therefore, there's a lot of capital flowing to Europe and to Japan. To Europe because of the war. Um, the invasion of the Ukraine has sparked a renaissance in Europe in terms of investments in infrastructure, energy, and military. After about 80 years of Germany being demilitarized, it's now um, looking to become the world's fourth largest military, and it's going to spend hundreds of billions. Um, Same thing with Japan. Japan has seen a 30-year decline in productivity and demographics, and now it is um, budgeting the biggest ever military budget on a 5-year basis. And the reason is obviously because of the South China Sea and the um, forecasted escalation in terms of what's going to happen with Taiwan. These types of investments are huge for economic activity. Just think Qatar and the World Cup. That brings a lot of money into a country. Same with military. So I think that we are in a dollar bill bear market. I think that we will stay in the dollar bear market for a few more years. I think that precious metals will do very well during this time, especially silver, because silver is the one that enjoys dollar weakness the most. Gold can rally in tandem with the dollar. It's done so many times, but silver fails to do so. So I think that this is an inflationary reset that we're going through. It's going to take a few years. I think that we will be at the other side of the storm in around 2027. And between now and then, next 4 years, it's going to stay rather inflationary, and that is not favorable for a strong dollar.
You mentioned before how much of an impact the Russia-Ukraine war is having on Europe with the bolstering of their military infrastructure, their energy independence. The United States is becoming more involved each day with the Russia-Ukraine war. China is challenging U.S. dominance. The inflation rate at home is currently at 4.9%, higher elsewhere. And we just had the second largest bank failure in U.S. history just a couple months ago. With all this volatility, do you think that it is greater today than what we saw in 2008?
Um, I don't think the volatility is as big as in 2008, but certainly in terms of real terms, um, the equity lost in 2008 on paper and realized was 20 trillion. And during the last 2 years, um, the world has lost 35 trillion in equity. It's almost double that of 2008. What I think is very interesting about this compared to 2008 is that um, during this period, I don't think that we are suffering from um, an unknown that erupted onto the surface, like subprime lending and similar exotic derivatives that that the investment banks were engaged in. I think that this one is a very well telegraphed event. In other words, Powell said, "Hey, inflation is out of control. We need to start addressing this. We thought it was temporary. It's not. We're going to raise interest rates and raise and raise and raise and raise and raise." So the people that are impacted by this the most are actually the wealthy. The wealthy have lost the majority of this 35 trillion because that's tied to their wealth the most. They are the ones that hold the stocks, the corporations, the bonds, the real estate, etc. To the average person, I think that this reset has has hurt some people's jobs or option compensation, stock compensation, and it hurt their ability to purchase homes at affordable rates. Um, but on the flip side, it has brought prices of equities back down, certainly of real estate. So if you look at the volatility of this, it's lessened compared to 2008, where you saw, I think, 15% unemployment at the peak of it, certainly over 10. Today, we're record low unemployment. So it's not hurting the majority of society in your active income, in your job. It's hurting your portfolio, or it's hurting the affordability of choices that you can make, but you haven't lost your job. And that's the big difference between now and 2008.
I know that you've been an investor for a while now. Let's say that a 2008 style economic crisis hits us today. What are three sectors that you are investing in tomorrow?
Well, for sure, go to wealthresearchgroup.com/portfolio, and you can download my portfolio. That portfolio actually has, I think, 55 stocks, out of which there is I would say, my superstar companies. Uh, there are about 17 of them. And the first thing I would do is I would load up on these companies. These are the companies that I would, that I, that I married basically, and that I would keep buying. If they keep operating at the level that they are, I would just keep buying more and more shares of these companies for the rest of my life. And if they keep ticking in when I'm expiring, then I would give them to my kids. Um, so that's sector one. Just the best world-class companies. And we talk about them on the newsletter. If you're subscribed, then you know. If you're not, then you can subscribe. And we talk periodically about these superstar businesses. So that's one thing. Secondly, at some point, I would be very interested in real estate. If there's a 2008 scenario, because there are clear migration trends in the United States. And so some cities are really booming. And as you know, for 2 years, millennials did not get married and have children during the pandemic. They couldn't even date. So now there's a marriage boom, there's a child formation boom, and when you have a child, you move out of the basement of your baby boomer parents. So there is a shortage in housing. So there are opportunities in the real estate sector, big opportunities, and I would definitely want to get involved with that. Third, I think that what's really interesting, if we have a 2008 scenario now, is secondary, or what we call distressed assets. So uh, anything that was over leveraged, and now the owners have to get rid of, I would look at those. And I am an investor in a secondary fund. In other words, in a distressed fund, where the fund managers are the ones that look for these opportunities. So those would be my three main sectors. That doesn't change if it's 2008, 2005, 2000, and whatever. I always invest in stocks and um, in real estate and in distress. Now, sometimes the distress actually means precious metals. So I think that if you pin me down on a given one, I would say it's silver.
Lior, I really appreciate your time and I greatly enjoyed this conversation. Thank you so much for coming on.
Thank you.
Now, before I let you go, I want to give you a quick update on one of the sponsors for this channel. I did an in-depth video a couple of weeks ago about US Gold Mining Inc. This junior mining company is a brand new IPO found on the NASDAQ under the ticker USGO. In that time, shares of USGO are up close to 60%, and it's one of the best performing NASDAQ listed companies. It's also one of the few junior miners traded on the NASDAQ. USGO is very close to being added to the Russell Index if it trades a bit higher. And if it makes it onto the Russell, it'll bring a ton of buying in the months to come. Every 401k who owns the Russell Index will also own USGO. So why is USGO exploded in value, and why is it being considered for the Russell Index? Partly because of what USGO offers as a company. As the name of the company suggests, it is a gold mining operation in the United States. The Whistler project, located in Alaska, is an enormous deposit containing 9.4 million ounce equivalent resources, with 3.4 million being measured and 6 million being inferred. USGO's market cap stands at $170 million. If you take out the $20 million in cash that they hold from this $170 million, you get $150 million. Divide that by the number of ounces they hold in the ground, you're looking at around $15 an ounce. They still have a lot of work to do to take this gold out of the ground, but if we compare it to the average mining company valuation of $40 an ounce, you can see it's trading well below. I mentioned how large this deposit is, but without proper context, it's difficult to gauge. The largest gold mine in the world, the Maranto mine in Uzbekistan, has produced 3 million ounces since the 1960s. The Whistler project has an estimated 9.4 million ounces, with 2/3 being inferred. This 6 million of inferred ounces is currently being explored. The area surrounding this project is heavy in gold, and USGO also can expand their size with the $20 million in cash on hand. Gold Mining Inc., the parent company, and another sponsor of this channel, has recently purchased 1.6 million shares of USGO on the open market, raising its ownership to 81%. USGO's large deposit and undervaluation will bring a lot of attention to this company. Its parent company, being the majority shareholder, is really important because if people or indexes are looking to purchase this company, 8 out of 10 shares will not be for sale. If added to an index like the Russell 2000, it can be a game changer, as the ETF would have to buy shares of USGO, with most shares unavailable, forcing the price of this undervalued company higher. I really like the size of the project, the location, its gold right here in the United States, and the value that this company brings to the table. If you've been thinking of jumping on this, or you want to add more to your position, now might be the time. As with all my other videos, I am not giving any investment advice. It's just something to look into if it interests you. Please do your own due diligence before making any investment, and talk to your investment and tax advisors. Your time is your most precious asset, and I appreciate you spending it here with me. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.